And for those of you that have been around for a while, you probably know that there are three major consumer confidence reports. There's the U.S. Consumer Confidence, which is released by the Conference Board, which is we have today, and it's the most important report. And then we have the Michigan Consumer Sentiment that we never trade because I believe that report has very low integrity. It leaks all the time, and it just I don't like that report. And we have ABC Consumer Confidence, which even has less merit than the other two. ABC is done on a weekly basis. Now, first of all, the biggest difference between the reports is the fact that they basically gather a lot less data. For example, U.S. Consumer Confidence surveys 5,000 people. U.S. Michigan Consumer Sentiment surveys 500 people. And the ABC Consumer Confidence, if my memory serves me correctly, I think about 150 people or so. So of course the U.S. Consumer Confidence is the most important one. It's the most watched out of the other three because it simply asks more people, and most of the time those 5,000 people are different people every time, while the Consumer Sentiment tends to ask the same people, and the ABC Consumer Confidence, it's on a weekly basis, and I'm not sure whether it's the same people or different people. But basically they send a survey to about 5,000 people, and about half of them respond on time, and then so let's say about 2,500 people respond on time. Then there's another 1,000 people that respond late, and about 1,500 that don't respond at all. So what happens is we have the initial reading of the first half that responded, which is released every month. Then we have a revision every month, which basically includes, and a new average is calculated when the other 1,000 get the surveys late. So for example, today we have the Consumer Confidence coming out basically for the months of May, and we're going to have a revision of April. So in April the Consumer Confidence came out at 104, and it's expected to come out at 105 in May. So we're going to see the two major numbers. We're going to see the actual number for May, and we're going to see a revision of April's number because more data is gathered for April. The way they calculate the consumer confidence is they ask a series of questions. The most important question, and I mean the questions are broken down into how is it going now and how do you feel it's going to go in the next 6 months. So they ask them, how's the employment situation in your area right now? Is it good, bad, or is it good, normal, or bad? And they respond to them, and then they ask, well, what do you feel will happen in 6 months? How are businesses doing in your area? Are they doing well, poorly, or kind of normal? And then how do you feel they're going to do in the next 6 months? And they ask them, how difficult is it to find a job now, and how do they feel whether the job market will improve in the next few months. Now it happens to be that the surveys of the U.S. consumer confidence are sent right after employment reports of the months, obviously because the employment is released in the beginning of the month. So for example, it's June 1st, on June 1st, this Friday, we have non-farm payroll coming out along with unemployment rate, and the U.S. consumer confidence, the conference board, will send out surveys for the month of June, in the beginning of June. So many times what people say about employment is biased about what everybody's yapping on the news about. So when everybody's talking about unemployment rate being very low, all of a sudden people are feeling confident. And so basically the two major drivers of U.S. consumer confidence is the employment situation and also gas prices. And because the employment situation was positive last month for the US, the unemployment rate was relatively low. What happened was they are expecting a little boost in the consumer confidence because of that. Though the gas prices have been up by almost 40% since the beginning of the year, and that kind of kills the consumer confidence, so to speak. So that's the situation with this indicator. If you look at the trade plan, as you can see, the expectation is at 105. I have a regular 10 pips limit trigger set, and I have bounds on Awanda at 5 pips actually, and I'll be using MB trading at 10 pips limit orders. If the deviation is at +2 or more, it would be a possible sell on GBP USD, -2, possible buy on GBP USD. So if a reading comes out at 107 or higher, it would be a possible sell on GBP USD. If the reading comes out at basically 102 or lower, it would be a possible buy on GBP USD. 15 seconds, 10 seconds, 5 seconds.
Sell.
Oh wow, came out at 108. Okay. I got filled at 98.46. Perfect fill there on the GBP USD. I'm seeing negative spread on the MB trading there. So there's no opportunities to enter. Okay, on MB there. For the after spike, you could try to go with a limit short at 98.40 or so. Again, we saw consumer confidence come out 108, and there was a revision of previous number from 104 to 106.3. I kind of want to hang on there with my initial entry of 98.46, like I said. Let me unblock the text from entry. The 98.30 level, I guess, has some significance, more like 98.20. I'm going to exit half of 11 pips profit at 98.35. Okay, just got hit 98.35. I closed half to lock in 11 pips. And I moved my stop to break even personally. And as you can see, the price is falling. As I said, I gave an after spike short at 98.40, but I never saw that on MB trading. I'm not sure if you saw it on your platform there.